Opens higher on positive global cues. Nifty moves above 17,900. The mid-caps outperform after a spell of weakness last week. PSU banks top gainers while pharma and healthcare connect.
PE firm Advent will acquire a significant stake in Suven Pharma. Advent will also make an open offer to acquire a 26% stake in the company. Managing Director Venkat Jasti tells CNBC-TV18 that there will be a maximum promoter stake dilution of 50%, while Advent will eventually get controlling stake in the company.
Restaurant Brands Asia trades 1.5% higher after the company says it will launch iconic fried chicken brand Popeyes in Indonesia.
Wellspun Corp will acquire Syntex's prefab plant via insolvency resolution. Also commissions a coke oven plant. Stock surges.
SJVN wins an order to develop a 100 megawatt wind power plant with a development cost of almost 700 odd crore rupees. The stock surges about 6%.
Good morning, welcome to Chartbusters. You're on CNBC-TV18. I'm Sonal Bhutra and with me is Mangalam Malu. Well, what a start to the week it has been, right, Mangalam? A 125-point uptick on the Nifty, and the SGX Nifty was not indicating major moves, so to say. There was largely weakness that we saw in the Asian markets as well. But yes, that's not something we're seeing today in our own markets. A 550-point uptick on the mid-cap index. That index turned negative for the year on Friday, but today again it has come back. And again, the important cue, last trading week of this calendar year.
Yes, it is. It seems like a totally different week from what we left on Friday, and the mid-cap index is, showing that. But then again, the question is that what does one do from here? It was oversold. Now it's seen a bit of a bounce back. Do upsides see some resistance or not? That's the question that we'll pose to Shivangi Sarda, who joins in from Motilal Oswal Financial Services. Shivangi, good morning. I mean, the first hour has been strong, but we run the risk of running into resistances.
Absolutely. Good morning, Mangalam and Sonal. Thank you for having me on the show. So we've seen that, Nifty has respected its crucial support of 17,777, which was the earlier resistance, and now it is acting as a crucial support. So now some sort of a role reversal can be seen, and this level can be acted as, and, it's working out really well. We've seen in today's session. Now, overall structure has taken a bit of a pause. We've seen that, after 3 sessions of, downside, we are seeing some sort of a pause over here, and we could expect some range bound move. So now, a hold of 1777 has been, taken, but now index has to cross 17950 to 18081, for the stance to change. So overall bounces is going to be there. We have to decisively cross and hold above 17950 for an up move towards 18,081 plus levels. So now it's the time to remain really crucial. It's anyway the last week of the series, and as we head towards the year end, we could see some sort of a pause, some sort of range bound move. Even in Bank Nifty, from the last 2 sessions, we've seen that it has been outperforming, as in it has not been facing so much weakness as compared to Nifty. We've seen that even today it covered the entire losses of the previous sessions. So now 41,750 would be a crucial support, and upside we could see a resistance around 42,500 levels.
Okay, and Shivangi, what would your individual technical picks be?
So my stock picks would be, first would be HDFC Bank. We've seen that strong resilience can be seen over here, and it is an outperformer, and it witnessed buying interest at lower levels despite a gap down, and has been forming higher lows from the last 3 months. So it is a consistent outperformer and a heavyweight. So a buy recommendation on this with a target of around 2750 with a support of 2590 levels. My second pick would be sell on Metropolis. We've seen that in the entire pharma space, this stock has been an underperformer, and somewhere or the other this stock is not being able to hold its range, and it broke its range on the monthly frame. So we've seen weakness over here, and weakness could be continued over here with a target of around 1240 and a stop loss of around 1320 levels.
All right, Shivangi, thanks a lot for joining in and giving us your picks in terms of individual stocks and the indices. With that, let's talk about some ideas for profit coming in from our colleagues at Money Control Pro. Sachin Pal joins in.
The company in focus is Venky's India, which is one of the leading players in the domestic poultry market. The company primarily operates in a fragmented industry, and therefore it enjoys very little control over variations due to the commoditized nature of the business. This has been one of the primary reasons that the company's operating margins have been under pressure due to a significant spike in input costs. However, input costs such as soya have seen some moderation in recent months, so that along with a pickup in volumes due to the ongoing festive season should drive Venky's profitability higher over the next 2 quarters. From a long-term standpoint, the company is undertaking capacity expansion at its various verticals. Also, the business enjoys a very sticky relationship with a number of QSR operators. The business also stands to benefit with the change in consumer preferences towards non-meat consumption. Well, the company remains a market leader, but the business is going through a lean patch and therefore the stock has fallen out of favor. Investors with a long-term perspective can therefore look forward to acquiring the stock at current levels.
All right, Sachin, thank you so much for joining us with all those ideas for profit. Let's slip into a short break. Kalpataru Power's merger with GMC Infra Projects gets